They say, money doesn't lie, people do. But what if someone lied so perfectly, so elegantly, so convincingly, that the entire financial world, from billionaires to banks, governments to regulators, believed him? What if one man fabricated $65 billion without actually owning any of it? This is not a heist, not a hacking, not a robbery. This is the story of the largest financial scam in human history. And the strangest part, the clues were always there, but nobody wanted to see them. The biggest financial scam in history, Bernie Madoff. Ese $65 billion. Before the scandal, before the headlines, Bernie Madoff was not a criminal. He was a legend, founder of one of Wall Street's earliest electronic trading firms, a man who helped create the modern stock market, a respected advisor who even chaired NASDAQ twice, a celebrity in finance circles, and above all, a man who made impossible profits look normal. But here's the strange part. No one actually understood how he made money. He claimed he used a strategy called split strike conversion. It sounded complicated. It sounded scientific. But it also sounded convenient, because every month, good or bad, his clients received stable, positive returns. No losses, no volatility, just profit. Something felt too perfect, but nobody questioned perfection because perfection was paying them. This was the first blind spot. Flashback. Late 1960s. A young Bernie Madoff opens a small investment firm in New York. At first, he's honest. He tries real strategies. He trades real stocks, but competition is brutal. Clients want returns. Rival traders are ruthless. And one day he makes a tiny decision, a decision that would later destroy hundreds of lives. He promises a client a certain return, but the market goes the other way. Instead of confessing, he borrows money from another client to fill the gap. It works. Nobody notices. And that's when Madoff discovers the dangerous secret lies can be profitable. What started as a small cover-up turned into a cycle, a method, a machine. A Ponzi scheme was born quietly, invisibly, in plain sight. This scam did not require genius. It required indifference. For 30 years, no regulator audited properly. No bank questioned his impossible profits. No investor checked how trades were made. No one ran the math. Everyone trusted the illusion. No one checked the reality. Bernie Madoff was sentenced to 150 years in prison, one of the harshest sentences in financial history. He died in 2021 behind bars, never seeing freedom again. But the deeper question remained. How did this happen in the world's most advanced financial system? The answer is uncomfortable, because people love profits more than truth. You may think the world learned its lesson, but no. Today, similar patterns are repeating. Crypto exchanges, collapsing fake AI investment scammers, billion-dollar rug pulls, influencers selling Ponzi-style schemes, unregulated online trading platforms. In fact, according to global financial data, over $108 billion was lost to investment scams in the last 3 years alone. History is repeating, just with new technology. And just like Madoff's investors, most victims believe the same lie. It looks safe, so it must be safe. 1. If returns are too stable, it's not investing. It's pretending. Real markets move. Flat, safe, predictable returns are a myth. 2. Trust is not a strategy. Verification is. If people had checked Madoff's trades, the scam would have ended in a week. 3. Scams don't rely on genius, they rely on your silence. Fraudsters survive because people don't ask questions. Right now, somewhere in the world, another Bernie Madoff is beginning another perfect lie, another guaranteed return, another illusion waiting to collapse. The only question is, will we see the warning signs this time, or will we fall for the next $65 billion lie? If you want more deep, investigative stories like this, hit the like button, subscribe, and turn on notifications. Because understanding the past is the only way to survive the future. Throughout the 1980s and 90s, Madoff's name becomes mythical. Not too high, not too low, always steady, always predictable, always safe-looking, exactly what wealthy investors desire. He created a perfect illusion, consistency in a world built on chaos. Everyone wanted in hedge funds, charity foundations, billionaires, Hollywood celebrities, European banks, even royal families. And the more exclusive he became, the more people trusted him. He rejected clients. He acted too selective. He made them wait. And that made people want him even more. But behind the curtain, something sinister was happening. No busy screens, no phones ringing, no chaos, no evidence of trading at all. Just a quiet office where fake account statements were printed, fake numbers were typed, and fake profits were generated. Everything controlled by a handful of loyal employees. A multi-billion-dollar empire built on a cheap printer. A few people did question his magic. Quant experts, competing hedge funds, financial mathematicians, and one man, Harry Markopoulos, ran the numbers and discovered something terrifying. Madoff's strategy isn't just unlikely, it is mathematically impossible. Markopoulos repeatedly warned the SEC, the U.S. financial regulator. He sent reports, analysis, charts proving the fraud, and every time the regulators ignored him. Why? Because Madoff was connected, respected, influential, a Wall Street icon. They trusted the myth and ignored the math. This was the biggest institutional failure in financial history. For decades, Madoff's lies worked flawlessly as long as new money kept coming in. But then the world changed. 2008. Financial crisis. Markets crashed. Fear spread. Investors withdrew billions overnight. Suddenly, Bernie Madoff didn't need to generate fake profits. He needed real money he didn't have. His scheme required $7 billion in cash. He had only $300 million. The machine had stopped working. The river of new deposits had dried. The illusion shattered. Madoff panicked. He confessed to his sons, who immediately turned him in. On December 11, 2008, the FBI knocked on his door. Madoff, it's all one big lie. It's a giant Ponzi scheme. The biggest scam in financial history ended with one sentence. The truth exploded across headlines. $65 billion. Gone. Except it was never real in the first place. The victims list was devastating. Lifelong savings wiped out, charities collapsed, pension funds destroyed. Cancer foundations lost their money, elderly investors forced back into work, people committed suicide. Several families fell into long-term trauma. The FBI uncovered an enormous pile of forged documents, fake statements, and imaginary trades. It was the financial equivalent of discovering a city built entirely out of cardboard.